dollar index has been all over the place. Yesterday with the
Mm.
big Fed meeting, we saw lots of volatility there. But this 104 level just does not seem to want to break. It's been so stubbornly strong. What are your thoughts on the dollar right now?
Yeah, so I'm not a big fan of the DXY and the dollar in general. I'm trying to stay away from the dollar actually, and focus on some other markets. But yeah, I'm looking at the yen. Well, I'm looking at the yen, but looking at the dollar. On the higher time frame, I don't really know what's going on, to be honest. I'm kind of just looking at this as just a big range, really. This is the weekly chart. So I'm kind of waiting just for momentum and for price to be either falling or pushing higher. Because again, for me, as a trend trader, I want momentum. So although there's some kind of minor trends within these moves, which is great, but at the end of the day, I want to see price kind of sustain moves in a certain direction, kind of like what we're doing over there and over here as well. Not really seeing that at the moment with the DXY. So I'm a little bit on the fence with things. I think because how prices had so many attempts at this low and still failed to break, I think there's a good chance we do see some upside for dollar, because we've had probably like 5 or 6 attempts to try and break through this, consistently failed to do so, minus that fake out over there. It does look good for a move higher, so I would be on the dollar bull side of things, but nothing that is really attractive for me to trade. It's just a lot of choppiness, so I'm kind of taking it easy with the dollar. Other markets look a little bit better, but yeah, I don't really like the price action at all.
I don't blame you. Yeah, when I look at the dollar index, well, actually, when it was dropping from like 106 here down to 104, and then it tried to poke through that level, I got really excited. I was like, okay, hey, look, we got something here. We might see some true dollar follow through to the downside. We didn't get that at all. Price was able to bounce back and now just chopping again right around this 104 level. So for me, I'm in the same boat with the dollar specifically. The price action is just not very clean. We're not getting follow through moves, and that's been the theme for some time now.
Looking for pullbacks, retest some price support, and see if we can continue to ride that momentum. So I really like Euro and pound yen as well, and I'm liking what I'm seeing.
Yeah, I like those charts as well, and the yen just really showing some strength. I think they raised their interest rate, which suddenly created some heavy buying for the yen. And the other thing just to think about with these yen pairs is that the rate at which they fall is just impressive compared to how fast they rise. I mean, they do rise very quickly. The uptrend has been very aggressive, but this is a pattern that you'll notice about the yen and just its characteristic. Like, every chart has its own kind of unique, idiosyncrasies, its way of moving. Well, the yen is very specifically volatile to the downside, because when people get scared about the financial markets, when they get scared of or uncertain about what's going to happen, the yen is like the stable. It's like the stable coin of fiat currencies. It's like where everybody rushes to go to when they're uncertain about what's going to happen next. So you'll see that these sudden drops in the yen, like here was 2020. Or the yen crosses, where people are buying the yen aggressively and selling like the pound or selling the euro. That is a theme. So if you can catch these moves to the downside, they can be very lucrative. The tricky part that I find with these pairs is that trend is very steep to the downside, but usually doesn't last very long. But maybe this time is different. Maybe this time we're seeing serious global concerns, and maybe there will be a lot of follow through. So right now, I don't see where the bottom is on these pairs. There does seem to be a lot of downside momentum, but we'll have to keep an eye. So you mentioned pound yen, euro yen. Are you looking at dollar yen at all, or not really?
Dollar yen, not really to the downside. Reason being, we've come into some interesting levels on the weekly chart, which is over here. So I do keep an eye on the higher time frame to see what price is doing and where we're coming into. And dollar yen has come into this level here. So it actually makes sense for dollar yen to see some upside. Now, potentially all the yen pairs can do that because they're kind of all moving the same way. So it's either they all move up or they all move down. But from a technical standpoint, and again, being a very technical trader, I don't really feel comfortable selling into this. Whereas if I'm looking at euro yen, we've kind of cracked through support. over there as well. And pound yen, we haven't really come into any area, any meaningful level in the higher time frames. So I don't mind continuing to look to sell that, whereas dollar yen has. So it's being picky because they probably will make the same move together.
Sure.
But I would be happy to trade euro yen because I know the path is a little bit clearer. Same with pound yen as well.
Our summer software sale is happening right now, which means you can get the Edge Finder for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edge Finder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edge Finder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
That's actually a kind of an interesting concept there too, Miko, about like you may choose, even though you just acknowledge like they're going to probably move in the general same direction, picking your specifics is huge. And for me, as primarily an index trader, picking specifics is like everything, because I'm generally bullish on the stock market, but there are so many different ways you can be bullish. You could be bullish on stable, conservative stocks, or you could be more bullish on high growth, high risk, high reward stocks, or you could be somewhere in the middle. You could be on the small company side, the big company side. And to your point about the yen, if you're trading currencies, you have all different options there as well. Are you going to be, more going with the US dollar? You like the US situation, or, as you're pointing out with price action, maybe you just very specifically think that a chart will move a lot better. One thing I've noticed about currencies is that if I'm looking at, if I'm looking at a momentum trade and I'm looking at, let's say I'm looking at AU, GU, and that's E, and EU, right? So if I'm looking at the euro, I'm looking at the Aussie and the pound. If I'm looking at these three and I see like, this one is just rocket shipping the best to the upside, this one is going up, and this one is kind of going sideways, a lot of times people would say they would maybe pick, like, if you're bullish on all three, a lot of people, what I've noticed, will try and go for this one because they say, well, this one hasn't run yet. But what I've noticed a lot of times is the best pick is actually this one, the one that's already trending very well, the one that's making the move. Even though you might say, well, it's already made the move, a lot of times it's going to make a lot more move even than this one, which might do a little bit. I don't know. Have you noticed anything like that? Like sometimes just buying the winner or selling the winner, selling the biggest loser is an interesting strategy by itself.
Yeah, I fully agree. I mean, because with me following the overall direction of the market, trend and momentum is really important. So if Aussie dollar was the one that's really pushing up and there's a lot of momentum there already, I know as a buyer, I'm going to have, it's going to be a lot easier for me to ride that higher. Whereas with pound USD that's moving sideways, it's kind of like I'm trying to kickstart the market, which is not actually moving anywhere. So it might, like you said, it might progress and be a big move because it hasn't moved yet. But at the same time, as a retail trade, it's just so much easier to trade when there is momentum in the market and not trying to force anything because it's not there yet.
Yeah, exactly. Well, I want to go to our next chart here. A lot of people have been asking about gold, which is getting closer again to its all-time high. I've been kind of on the sidelines with this one. I mentioned I've been trading a lot of indices in the last few weeks. We've also been a bit choppy for me, but we're starting to see what looks like a higher low, some momentum picking back up in this market. We also had some geopolitics that kind of escalated things again in the Middle East and seem to be pushing gold higher. Do you have any thoughts on gold or silver, either one, metals?
So yeah, generally speaking, still very bullish on them on the higher time frames. We're still pushing up pretty well. As you said, we are becoming a little bit more corrective, so it's difficult to find trades. I did take a position last week on gold, and I just got stopped out annoyingly. But yeah, that's going to happen sometimes. It was roughly around there. Just took me out before it decided to fly to the moon there. So I've been looking for pullbacks for it, but now it's a little bit too high, so I do need to come back down. I wouldn't be looking to take any buys in this area, so close to the high and generally resistance. So I do need price to come back down. But yeah, it does look pretty bullish. We just had the monthly candle closure as well, and that closed pretty bullish too. So, who knows, potentially you could see August push on from that as well. And generally speaking, it is just a very bullish environment for gold and for silver as well, although gold looks a bit more attractive. Silver looks a little bit more chaotic, so I'd rather look for pullbacks in gold at the moment. But yeah, I wouldn't be surprised if you were to go and hit that high pretty soon and maybe see some new highs at 2,500.
Yeah, I like the gold chart better than silver too, which is interesting because we both flipped on that. We both at one point were like, "Oh, the silver chart looks way better," and I did take this trade, and I made some money on it, but I ended up trailing stop right there, and the entry was like right there. So I made some money, but I was thinking, oh, this is going right through the highs, and we did not get that at all. We kind of fizzled out, put in $1,000 lower high, and then the market broke underneath this. So to me, price action's tricky on silver, and in fact, we're at a level of what was support could turn resistance here. But if it is able to break above that, then that would perhaps bring some confidence back in. But even still, even if we break out here, if that's what happens in the next few days, I'm still like, okay, well, now we're just in a choppy spot. Whereas with gold, to your point, chart looking a little bit better on the daily here, because this actually, I also had some not so fun experiences with gold. So I went long here. This was great. I made money on that one. And then when we broke back underneath here, I trailed out. So I gave back some gains. Then I went long again right around here, thinking that this level could offer some support. It did, but then my stop loss, it failed out right here. I never trailed a stop, and then I took a loss there. So I gave back some profits, then I took a loss, and now it's moved on without me. So where I'm at to now is okay, this has been a nice push. We've broken through where we last failed out. We even retested, and I didn't get that entry, but if we get something like this, I may actually be looking at trying to take this back to the highs, because I think that to your point, the higher time frames still look generally bullish for metals, and this is a good, as you mentioned, a good environment without even getting far into the fundamentals. We're seeing expectations for rate cuts, and geopolitical tensions are still high in the global stage. So I generally like it. So we'll see where that goes, but just wanted to get your thoughts on that. So I guess next one to go over is the indices. So, my favorite spot, but the recent pullback looked pretty daunting. Then it seems like we found a little bit of a bottom. What are your thoughts on any of the indices?
So yeah, indices are looking pretty good, I must admit, particularly NAS and S&P, especially in the higher time frames. I've been eyeing them up on the daily, and I think we've had a really nice pullback now. It seems the pullback has pulled back enough, if that makes sense.
Yeah.
To a point where we could look to continue. I mean, in terms of how the market's moving, it's pretty proportional as well, and I like the fact that we've got this trend line confluence coming in, a really nice rejection yesterday, strong bullish engulfing candle. So it does look like momentum is shifting from the bears and back to the bulls now after this move. So as long as we can kind of hold this general region here around 18,800, I would say on NAS, I would expect us to slowly make our way back to the high. Sure, there might be a bit of downside in the meantime. This is the daily chart, so there will be bearish candles there. There probably will be shorter term sell opportunities. In fact, kind of trading at some areas right now where price might take a dive. But generally speaking, I would expect NAS to make a move higher. Same thing with S&P as well. I believe this one had a similar trend line connecting the low here to the high as well. And again, another reaction there on the daily chart. Strong candle engulfing all this previous price action. So momentum is shifting there. So I think there's a pretty good chance we'll probably make our way back to the high there as well. So and US 30's almost at the high as well. So generally speaking, it does look pretty bullish for the indices, and we could probably see higher prices.
So I love your breakdowns there. I do see mostly the same. I mean, I wanted to talk about this Dow because I'll brag first and then I'll tell you about my not so fun parts about the indices. I caught this entry like I've not had a trade that had less drawdown in a long time. It felt really good. I got this entry and it was like immediately. So, you know, even though this was for me a fundamentals plus technical trade, as it always is, you got to give it to the technicals here on the timing. I mean, the perfect, you know, it was so obvious. But here's the thing, Miko. I mean, a lot of times people will say when it's so obvious like that, you know, it's going to like fake out and then do this. But this is why I'm an advocate for technicals, keeping it simple. I know you are as well. This was a key level of support. It was a round number. I mean, 40,000. In hindsight, it's very obvious that that was going to hold. But in the moment, it's like, man, this thing is selling off a cliff. I don't know. This may hold. This may not. I liked the risk reward, and the market immediately moved in the right direction for me. So just wanted to brag for a second. And then on the NASDAQ, I am in a good trade now, but I took multiple stabs before getting it right. So I took a big loss here, tried to go long on this pullback, thinking, you know, kind of this trend line would hold. Did not. Came down to this support level, looked good for a second there, then fell through the floor, stopped me out. I lost more money there. Then this entry went very close to hitting my stop loss and has now bounced back into profit. But just, you know, even in a bull market, it's easy to mess up the entries. So may have been a bit aggressive in my first attempt and second attempt, but the third one was good, and the Dow Jones entry looks like it might hold for here. I'm curious to see if we can break through the highs, but you know, we'll see. But thanks for breaking those down. I know indices are very hot this year. They've been just in a perpetual uptrend, and so I've been trying to kind of pull back entries, stay calculated with it. But nice to hear your thoughts on that. Are we going to see 104 break? What is making the dollar so strong at this level?
I just think that the market's not ready to run and price in the dollar weakness. I mean, look, 103.90 is my level that we're coming close. So August is typically this kind of transition month, and August also tends to give us these really sneaky breakouts. So I could see it being really choppy right around this 104 level, but the more that gets pestered and peppered and hit over and over, just don't be surprised that the dollar, especially with the rate cut cycle coming into the end of the year, I think that the dollar ends up going below 103.90 and we start looking for a decent run on the dollar. I've not been impressed with the dollar direction the last couple of months. This to me is nonsense because it's not really giving us a lot of good trades individually. You got to be in and out of the dollar for the last couple months. So hopefully dollar trading gets a little bit easier. If we make a nice clean break below 103.90, to me, this is, you know, sell the rallies, and hopefully the dollar continues to trend lower towards the end of the year towards 101. That to me would be a pretty easy trade, because as a basket trade, probably the currency pairs I like the most would be Aussie dollar long, New Zealand dollar long, pound dollar possibly having the resiliency. I might stay out of the euro dollar, but then dollar CAD looks like we could drop. There's more dollar yen potentially. Nick, I found something pretty interesting. I know you have to go here in a little bit, but I look back at the history of the Japanese interest rates, because I'm like, you know what? I know we've been at negative interest rates for a long time, but how long, in fact? I mean, this for almost 25 years has essentially been hanging out between 0, -1, and like 25 basis points. So right now, to go from -1 or -0.1 to 0.1 to now 0.25, we're still in this ridiculously easy, accommodative monetary policy. It's funny how the market's reacting so ridiculous to, hey, wow, they raised rates from -0.1 to 0.25, and it's reacting like the sky is falling. And so I mean, look, I still think there's more of this unraveling carry trade to happen on the Japanese yen. But do we think that the Bank of Japan is going to go raise rates to 1%? To 2% to 3% to kind of find these like other central banks where, if the US drops to 2.5% to 3% over the next couple of years, is the Bank of Japan going to be right there with it? I doubt it, but obviously it's going to be interesting how it all unfolds.
Yeah, that is. And you're seeing more downside right now for like things like UJ. Seems like the yen staying strong for now. And I think that the rate cut definitely brings a little bit of short-term strength to the yen. But what we keep talking about with this story on the yen is it is the global market trying to figure out if this is cooling in the economies of the world before rate cuts pick things back up, or if this is cooling in the economy that is going to turn into serious weakening of global economies. If you see serious weakening in the global economies, the yen's going to look like a golden relic. It's going to look so strong, because then you've got a more predictable, kind of slow growing economy that, it's not very exciting in growth periods, but it sure is exciting to have your money, parked somewhere reasonably safe while the world's falling apart. So that's the question. And I'll say, Chris, I think I lean more towards the soft landing camp, as you know, but I can see that the yen long positions could be an interesting hedge if let's say we're just wrong, and let's say that the economies of the world really do go into a period of maybe not a complete global shutdown recession, but if we enter into a prolonged period of not as much growth, not as much excitement, all this stimulus money, maybe all the fiscal spending dries up, or not dries up, but we realize that maybe the growth was a little bit, what's the word I'm looking for? Falsely created. I don't know. We'll see.
Yeah.
But
it's fabricated for sure.
Yeah, fabricated. Yeah, you could see an environment in which the global economy just doesn't see a ton of growth, and maybe the yen just looks like a little bit more stable, a little bit more, kind of a better option. But I'm not personally in that camp, but I can see the hedge idea that makes sense there.
Sure. Well, we'll see how the FXY does. That's pretty much my hedge for right now. And
I like it.
If my stock I've got to break even at 60 because I did protect the downside. Initially, when I got in this thing, it was down here around $57 or like $58 when I bought it. But because of that debit, and that debit lasts me out to the end of the year. So I thought, well, the Japanese yen isn't ready to unravel yet. I'll protect it. But anyway, so my break even $60. If we see a longer run, now that I own the shares, I take the options expirations out of it. If we run up here towards 70 plus, it's worth it. I mean, I'll make a few bucks on the trade.
Yeah.
I can still trade Japanese yen futures, which is fine. Currency wise, I mean, if I look at a pair, I think I talked to some traders this morning about this. Euro yen is an example in the near term. I have a fib drawn from this top to bottom. I mean, I wouldn't be surprised if anybody's lining up like a 1 hour chart to then say like a 15-minute chart. And if we start to see that this is stabilizing and then starting to show upwards, like an upward correction, all I'd look for is if we pull back to like a 38 to a 61% zone, that would just be the near-term bulls correcting. But I mean, you can't ask for a cleaner technical trade than this. We took out lows, we took out the intervention we had back in April and May. If we pull back to a 38250 zone, I think this is a good spot for any type of buyer to be risk-free or protecting some longs if you're going to get long. Or for the swing trader, I think the swing trader is just going to wait for this area, look for a sell trade, and see if we come back and retest the low. Stop loss initially above the highs, but then going back down to eliminate risk, get to the lows, and then see if this is going to continue to unwind. So I think there's good opportunities out again if you're paying attention. I don't know how fun it's going to be to try to buy this thing because it could be, we could all make a correction in one day, and then we look to see if that swing trade is going to be pushed back to the downside. So I'm watching the yen pairs. Like I said, for me, if I don't trade the yen, no big deal. I'll just stick with the FXY. But the dollar's a big story, man. I think that you gotta look. I've been annoyed, like I said, about the dollar crosses the last 3-4 months. But if we get a nice clean breakout coming out of August, I think this like September to end of the year move, especially coming into rate cuts, the dollar could be a really nice trade. And I, for one, would not mind having a 300 to 400 pip move across the board. If you have $7 pairs and you've got 300 to 400 pips across, I mean, you're looking at a pretty good chunk of profit. Probably 2,000 to 3,000 pips.
I think again, if you're more in the camp of where I am, where I think that global growth is maybe temporarily cooling, but may pick up, the US dollar short trade could be really strong because usually when we see global growth, the dollar is usually weaker, giving other currencies, emerging markets maybe a turn to. And that's overdue. That's a trade that I think, we might talk more about in the future, Chris, because I know you're long China. There's also like emerging markets trades that you could look into. There's other places that have the U.S. outperformance makes, U.S. indices just so attractive, so interesting to everybody. But there is a longer term theme that might swing back the other way, which is other economies of the world might, pick up the pace and really see their stock markets make some big moves. Could be worth exploring in the future as you've got FXI.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.